How do you know a day is going to be low probability seek and destroy? Let's talk about it. So right here, how to know when price action is going to be choppy. So for one, and I always preach this, start off with the economic calendar. You can forecast which days are likely to be choppy during the weekend. So just how we went over the economic calendar before we started this webinar, I'm already forecasting which days are likely to be choppy. What days are that? Monday, it's possible to have a choppy, difficult morning session. And Thursday morning, and especially Thursday PM session. Those two time periods, those are days that are likely to be choppy, low probability. Those are typically the days you see streamers lose money on streams. Those are more difficult days. So first thing, pay attention to the economic calendar. The economic calendar and the news events are going to tell you which days are likely to be choppy. All right, very important. If you're trading the AM session, when you have the Fed chair speaking, that's probably not going to end well. If you're trading the AM session, if the Fed chair is speaking during the PM, that's probably not a good idea. Okay, if you're trading Thursday of NFP week, probably not a good idea. So there's ways to judge whether or not the day is going to be hard based on the economic calendar. Now, as far as price action goes, as you see here, this was Friday's trading. Okay, so this just happened yesterday. I like watching other streamers on YouTube. I have a few people that I like to watch just because I like to see what's going on in the trading community just a little bit. But a lot of people were taking losses on Friday, and they seem to fail to realize that it was a low probability day. And it's not until after they get chopped up, they look back at price action and say, oh, it really didn't do anything. I don't know why I pressed the button. It was just going sideways. So this is how you identify that real time, okay? One, economic calendar. We got that out the way. Put your midnight opening price on your chart, all right? It takes 2 seconds. Have it on your chart, all right? It'll save you from a lot of losses, okay, and taking bad setups. A rule of thumb, if we're unwilling to leave that midnight opening price and we keep coming back to it, keep coming back to it, that is signs that's going to be a low probability day. So what do we do here? We trade below the midnight open, above it, below it again, above it, below it again, above it, below the midnight again. That's not what we want to see. So this is why, if you remember in the streams, for those who are in the stream Friday, this fair value gap here, I want to see this stay open. If we're going lower, I want to see this fair value gap stay open. We already traded up above the midnight open, clearing buy side. We should be selling off if we're bearish. There's no reason to return back to the midnight opening price and hang around. Okay, that's not signs of strong order flow. Same thing if we're bullish. If we cleared out sell side here underneath this low with this drop down below the midnight open, fair value gap, we should be trading inside that fair value gap and rallying. Okay, there's no need to get back below the midnight open and hang around. So the fact that we're unwilling to leave the midnight opening price, we keep coming back to it, keep coming back to it, keep coming back to it. Look at the consolidation here. Just hugging the midnight open. That's low probability. Okay, if I see that, I'm not pressing the button. Another thing, I have a new week opening gap here on my chart. That's where you see this gray rectangle region here. That's a old new week opening gap. Same thing with the midnight open. If we're unwilling to leave the new week opening gap, that signs that's going to be a difficult trading day. Okay, new week opening gap should be offering support. We should be bouncing off of it and rallying. All right, how many times have we seen the midnight opening price where we trade below it, clearing out the sell side, and then we rally? We never come back to the midnight open. It just runs. That's how it should be. We went over power of 3 examples a couple minutes ago. What happened when we looked at power of 3 for the session? It traded down, Judas swing, and it rallied. It didn't hang around near the opening price. All right, same thing for the PM session, power of 3 we just covered. Okay, we would open, trade down, and then we rally. What do we do here near the midnight open? What did we do at 10 o'clock since we just talked about morning power of 3? This is your opening price at 10 o'clock. Okay, we rally up, trade down. What do? We come back up. Okay, we need to leave. Okay, we need to leave. Another thing, this would happen a lot sometimes too. There will be an instance where we'll have two new week opening gaps, and it'll look something like this. All right, we'll have a new week opening gap or new day opening gaps, and we'll kind of bounce around in between the two. If I see that we're stuck in between new week opening gaps and we're bouncing around, stuck inside this range, I'm not pressing the button. Not a chance, not happening. All right. So it's also important to have those new week or new day opening gaps on your chart, because sometimes price will just do this. It'll just stall. It'll just go sideways. People who aren't aware of the midnight opening price or new week opening gaps, they'll try to force setups all in here, not knowing that we're ranging. Okay, we're just going sideways. And then, yeah, also that's a dead giveaway. Spar Hawk, if it's a mixed market, that's the easiest like telltale sign. If NASDAQ's going higher, the Dow's tearing lower, S&P is consolidating, dollar's going higher with the NASDAQ. If your market condition looks like that, don't press the button. Either show up for the next session, the PM session, or the lunch hour when the markets are more in sync and they get on the same page, or just show up the next day. But it's not a good idea to buy the NASDAQ when dollar is aiming for buy side liquidity or is going higher towards some premium array. Okay, you want to buy the NASDAQ when dollar is either consolidating or going lower, and you want to sell the NASDAQ when dollar is consolidating or going higher. Okay, if they're moving in the same direction, just be patient, wait until they get in sync. How to determine seek and destroy before you get chopped up: economic calendar, consolidating near the midnight opening price, consolidating between two new week opening gaps, and mixed market conditions. Those 4 things right there will save you a lot of money.